Good morning. This is Vance, and it's Tuesday, May 17th, 2016. Welcome to my morning session on Forex trading. This is the second week in a row where I see heightened confusion in the markets, and this happens from time to time. The markets kind of lose their place in the story a bit. I guess more accurately is they're not getting clear information that they can agree on. Oil has almost reached $50 a barrel. Which has been, one of the things that has been going on the past month. The Eurozone continues to release weak data. There are signs of, they're kind of still finding their bottom, actually. The UK is not sure if they're going to break it off with the Eurozone. And in the US, the Fed seems adamant that they're on course to raise rates, but the market does not believe them. Now, typically what happens here is they eventually convince the market. Anyway, that's what's going on right now. Any of that's subject to change, but that's where it's at right now, and it's just causing some confusion. All right, looking at price, let's take a look at the pound first. Price is back in this range here after a second attempt above 14500. So you can see there's a lot of sellers right here. This week so far, the money is on a rising pound. So you can see that this week we've come up 177. Now today the pound is down since London open, total of about 90. So kind of going against where we were. And you could call this a correction down, but with this range here, it gets a little muddy. So today the sellers have it, while a little bit bigger money is positioned to the top side. In other words, if you sell, you're going against the balance of money, increasing the risk. And the way I measure that balance of money is just with the 21 and 55 EMAs here on the 30-minute chart. There's a certain amount of money that's available. People have, investors have their long-term positions, but then they've got a certain amount of money today, tomorrow, this week to move in and out of things. And that's what determines this position right here. So I've called it often, the intermediate money. It is quite short term though, but I don't want to confuse anyone and make them think we're talking about, real tiny movement. We're not. So that's where we're at with the pound. They're moving down, but you'd be selling against this little bit bigger movement. And what that does, quite simply, is increase your risk of losing the trade. All right, so let's go to the euro, where you're going to see that the buyers and sellers are essentially equal in terms of those moving averages. And keep in mind, I've been doing this for 12 years. Somebody's going to tell you, well, moving averages are lagging. If you really understand what I'm talking about here, these moving averages are pretty much 100% accurate, because after all, we don't trade them unless we have the moving averages in position and we have a trend advancing. And in that context, these moving averages are 100% correct. And if anybody wants to, take me on that, just let me know and I'll explain it. Let's see. Now this range here is pretty small. This range, you see, just before I was starting my broadcast, I just put together a couple notes, and there you was trying to push this top side in this 30 pip range. And so what we got to do right now, since this is developed, is pop down to the 5-minute and just kind of take a look, make sure I think we've got these in the right place. And what we're showing here is we're showing this made a run up. There's a lot of sellers right in this area. Let's see how much it moved above, about 9. So right now we're showing that over 2 different 5-minute periods, the buyers have been able to outbuy the sellers above this area. So we're more likely to continue up. I don't like this long wick here showing me that there are a lot of buyers. In other words, a lot of sellers. In other words, these buyers here are pushing through these sellers. And the reason for that is we have to look just a little farther back and see that, if we're taking, a whole week into account here, there's a lot of money positioned to the downside, and then a little bit of uncertainty causes it to go sideways. So really, this could be viewed, if you come back here and say, hey, we're kind of in this realm, or we're being affected by this move. We're really just coming into 50% here, and now you see why that wick was created. So we come back to the 5-minute. This is the sellers from last week repositioning just under the 50% level of the fib, and probably if we adjusted that fib a little bit, we could get that to come right to the 50%. So that's where we're at. We've got the buyers showing they have some strength above this area. Again, let's go back to the 30-minute test. Oh, I forgot to check the sound. We're good. But in the bigger period, and keep in mind, this selling is caused by the bigger period. They haven't been able to get that 30-minute above there. So if you're really serious about this trade, I think if you assess all the risk factors, probably going to need to wait for a 30-minute to close above this. If it does, these guys are going to move, and their next move, they're going to find some quite a bit of selling, maybe in this 61.8 area, which corresponds to this supply area right here. You see how they were in this range, and then they broke through here. So this is an area where the sellers really had to fight to get through, and so the sellers are going to see that and have a lot more interest. So you'll start to see selling interest just below this area right here. All right, before we continue, I just want to show you real quick. I give out a free book. You don't have to register with your email or anything at all like that. Just go to forexartofwar.com, and there's a banner right here in the center. This kind of, I don't know, ugly yellow. Click on that, and you'll see the book just come right up. That book is basically my gift to you. After my 11 years of working with traders and training, I left behind all my knowledge in this book, or at least most of it. I didn't intend to leave anything out. So this is probably one of the most valuable books on Forex trading and learning how to do it that you will find. All right, so forexartofwar.com, you'll find that. So let me get that off my screen. We're back to there. That's good. All right. And guys, you can email me. It's my name, Vance Williams @myself.com. Pretty easy to remember, Vance Williams @myself.com. If you have a question that you run across in the book, or just have a question in general, any type, you can email me, and then I'll cover your question during this segment. Now, you guys have probably noticed I'm scheduled for 9:30 Eastern for this call. I'm moving it a little bit later. After 12 years, I just would not have to get up in the morning early because I'm on the West Coast. I don't mind. If I do get up, I'll do it a little bit earlier. But I'd like to get a little bit more rest, and mainly just not have to worry about punching an alarm in the morning. So I'm going to do these, continue to do these a little bit later unless I'm up earlier, in which case I'll do them a little earlier. But pretty much look for me around the 7:30 time, 10:30 Eastern. I'll definitely try to get this done long before the New York folks get into Wall Street. All right, so if we pop back, and I gave you the reason why what we would typically look for in a buyer-seller advantage is a close above the 5-minute. When you get a run up like this and a run back down, we don't like that. Had we seen perhaps this one close here, then that would have been followed by a 10 to 16 pip run up, and it's just something you'll see over and over again. But having this wick created and showing the sellers there, I told you why those sellers are there. It's just the situation we're in. So what you're watching for now is you're watching for a close above this level, which is 113.40. So 1.1340. That's what you're looking for, a 30-minute to close above. If it does, you should see a bit of a run up here. So you guys can watch that and see what happens. See if I got anything else. I don't really have any currency pairs up on my screen right now. When you read my book, you'll understand why that is. The franc is totally manipulated. The yen is totally manipulated. The Aussie and the Kiwi are being traded. It's kind of like the if you've got the US dollar, Australian dollar teamed up there in a pair, it's kind of like having an elephant with a raccoon on its back. This is not the type of variable that we want to be involved with if we're trying to predict human behavior consistently. And if you don't know what logic is, if you're kind of new and you're not sure what this is all about, can we anticipate the future? How do we do that? The reason why we can anticipate the future is very, very simple. Human beings have repetitive behavior. And the key to repetitive behavior is consistent variables. So we might have a lot of consistent variables, but have non-farm employment data coming out tomorrow. That's a very inconsistent variable, which will cause the behavior to change. So what you're looking for is variables that allow for consistent human behavior. So trading the pound, the euro, the dollar, those are consistent variables. Those three equate to about 70% of liquidity in the Forex market. So you'll see these types of things in my book, and you'll understand why we make decisions in the way that we do. If you want to anticipate the future, just think of a friend. Which one is predictable and which one is unpredictable? The one that's predictable has more consistent variables. They have the same job. They have the same car. They have the same partner in life, what have you. And so that's what we're looking for, because if you have consistent variables, you have consistent behavior. And if you have consistent behavior, you have a high probability of anticipating what they're likely to do again. It's really as simple as that. But the complication comes in, and when you don't know what you're doing, and you're one person telling you this, another person telling you that. Trust me, you cannot make trading decisions based upon what someone else tells you. You have to be fully skilled yourself, making these decisions on your own, and ultimately confident in what you do. And so my book will help you to do that. I think that's about it for today. I'll pop back in on that euro and see. They're just kind of holding in this little tiny range. What is it, about 10 pips, 11? So it's 7:24. You got about 6 minutes to see if the buyers can push this above 11340. That's what you're looking for. And I realize this reconciled here just over. I'm not going to worry about that. Let's double check that. Look at the 30 minutes, see if that's where we want it. Yes, that's where we want it. You can see that of all the money moving, which is billions of dollars back and forth over a 30-minute period, the buyers have not been able to close above this level. So if they do, that will represent a change, showing a buyer advantage. And as I told you, you've got a little bit of room to run before you run into the next supply level, which is about 18 pips. So if you can manage all your risk factors in that area, you end up with a high probability trade. All right, guys, that's it for me today. I plan to be back here tomorrow at, around 10 a.m. Eastern. With that, have a great day. And remember, write to me, Vance Williams, my name, @myself.com if you have any questions. Take care. Bye.